Less than a week ago in Houston, we have a problem. 85% of silver in London already held by ETFs. We explained how with the emergence of the hashtag silver squeeze. The silver-backed ETFs which claim to hold their silver in London now account for 85% of all the silver claimed to be stored in the London LBMA vaults, over 28,000 tons of the LBMA total of 33,609 tons. This, for anyone who can out 2 and 2 together, does not leave very much available silver in London for silver ETFs or for anyone else. Especially the largest silver ETF in the market, the giant iShares Silver Trust, SLV, which let's not forget has the infamous JP Morgan as custodian. That SLV has seen massive dollar inflows in late January and early February with corresponding jumps in claimed silver holdings is now widely known, but is worth repeating here for what's about to come next. 3,416.11 tons of silver. The intense market interest in the iShares Silver Trust, SLV, started on 28 January when a huge volume of 152 million shares traded on NYSE ACA. Again on Friday, 29 January, SLV traded a massive volume of 113 million shares. This led to an increase in SLV shares outstanding on Friday, the 29th of January of 37 million shares, and a same-day claim by JP Morgan, the SLV custodian, that it had increased the silver held in the SLV by 37.67 million OZS, 1,171 tons, all claimed to be sourced in the LBMA vaults in London. On Monday, the 1st of February, an even larger 280 million SLV shares traded on NYSE, and by end of day SLV shares outstanding jumped by 20 million. On that day, SLV claimed to add another 15.376 million ounces of silver, 478.25 tons, within the LBMA vaults in London, about 3/4 of the value of the new SLV shares created on that day. On Tuesday, the 2nd of February, with SLV trading still elevated on NYSE, the iShares Silver Trust created a massive 61,350,000 new SLV shares, bringing the SLV shares outstanding to 729.1 million. On the same day, JP Morgan and BlackRock claimed to have added a huge 56.783 million OZS of silver, 1,766 tons, to the SLV, again all in London, an incredible amount by any measure, but still short of reflecting the total of 118.45 million total of new shares that had been created between Friday and Tuesday, which led them to adjust down shares outstanding by 8.6 million on Wednesday, the 3rd of February. Over this time, you can see a nearly 1-for-1 relationship between the change in number of SLV shares outstanding and the amount of silver ounces claimed to be added to SLV. Between Friday, the 29th of January and Wednesday, the 3rd of February inclusive, SLV shares outstanding increased by a net 109.85 million. Over the 3-day period from Friday, the 29th of January to Tuesday, the 2nd of February, SLV claimed to have added an incredible 109.83 million OZS of silver, 3,416.11 tons, with holdings of silver bars rising from 567.52 million OZS of silver to 677.35 million ounces, from 17,651.77 tons to 21,067.88 tons. According to the SLV daily bar list, this extra 3,416.11 tons of silver added to SLV between the 29th of January and the 2nd of February was in the form of 113,501 good delivery silver bars, the bars weighing approximately 1,000 ounces each. Again, according to the SLV bar list, these bars were added in 5 London vaults which SLV uses, namely Brinks Vault in Premier Park, London, 45.5%, Loomis London Vault, 27.7%. Brinks Unit 7 Vault Radius Park, London, 15.5%, Malcolm Mid London Vault, 6.0%, and JP Morgan's own London Vault, a measly 5.3%. In fact, according to the bar lists, SLV only started tapping into silver in the Brinks Premier Park Vault on Monday, the 1st of February, and only started tapping to silver held in the Loomis London Vault on Tuesday, the 2nd of February. Which to some people may look like a case of desperation or maybe even panic. SLV silver holdings over the 6 months from August 2020 to February 2021. Source: www.goldchartsrs.com. Unable to acquire sufficient silver. Adding 3,416.11 tons of silver to SLV between the 29th of January and the 2nd of February is not something that JP Morgan can easily claim to do again. Which is why it's particularly interesting that on Wednesday, the 3rd of February, right after claiming to add 3,416 tons of silver to SLV by frantically tapping the LBMA vaults in London, the iShares Silver Trust prospectus was changed and the following wording added. Quote, "The demand for silver may temporarily exceed available supply. That is acceptable for delivery to the trust, which may adversely affect an investment in the shares. To the extent that demand for silver exceeds the available supply at that time, authorized participants may not be able to readily acquire sufficient amounts of silver necessary for the creation of a basket. Baskets may be created only by authorized participants, and are only issued in exchange for an amount of silver determined by the trustee that meets the specifications described below under description of the shares and the trust agreement deposit of silver, issuance of baskets on each day that NYSE ACA is open for regular trading. Market speculation in silver could result in increased requests for the issuance of baskets. It is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets, due to a limited then available supply, coupled with a surge in demand for the shares. In such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrence may lead to further volatility in share price and deviations, which may be significant in the market price of the shares relative to the NAV. That the prospectus change was first drafted on Wednesday the 3rd of February is clear by looking at prospectus PDF file name, which is PI Shares Silver Trust Prospectus 3 February .pdf and the PDF title Microsoft Word SLV 2021 0203 S3 ASRV1 DOCX, which was authored by someone called Nick. While the draft started in Word, the final version was saved as a PDF on the 5th of February. SLV Prospectus Amendment Draft created on Wednesday the 3rd of February. The final PDF date is the same day, the 5th of February, that the amended prospectus was quietly uploaded to the SEC EDGAR website. Here, with an effective date of the 8th of February. The previous version of the SLV prospectus was from the 14th of January. SLV informs SEC of its amended prospectus the 5th of February. Below you can see the changes in the new the 8th of February version of the SLV prospectus compared to the 14th of January version. SLV prospectus left-hand side the 14th of January version, right-hand side new February version. Bullion Star picked up on the fact that there was a new prospectus with a suspicious the 3rd of February date, and then a Twitter user, HT Rolzens, compared the two prospectus versions to pinpoint the amended text. In addition to the paragraph above about silver demand exceeding available silver supply, the SLV prospectus also added into two further paragraphs under the first, one of which ominously predicting volatile share price movements that could be uncorrelated to the silver price. Quote, risks related to the shares. A sudden increase in demand for shares that temporarily exceed supply may result in price volatility of the shares. A significant change in the sentiment of investors towards silver may occur. Investors may purchase shares to speculate on the price of silver or to hedge existing silver exposure. Speculation on the price of silver may involve long and short exposures, to the extent that the aggregate short exposure exceeds the number of shares available for purchase. Investors with short exposure may have to pay a premium to repurchase shares for delivery to share lenders. In turn, those repurchases may dramatically increase the price of the shares until additional shares are issued through the creation process. This could lead to volatile price movements in shares that are not directly correlated to the price of silver. Quote, humorously, the third new paragraph inserted into the SLV prospectus explains that the silver price, which don't forget is a paper price set by the dominance of bullion bank trading on COMEX and LBMA London, is subject to extreme fluctuations which are unrelated to physical silver demand and supply. But alas, there is no mention of the years-long silver price manipulations that JP Morgan and other LBMA cronies have been recently prosecuted for. The trading price of the shares has recently been and could potentially continue to be volatile. The trading price of the shares has been highly volatile and could continue to be subject to wide fluctuations in response to various factors. The silver market in general has experienced extreme price and volume fluctuations that have often been unrelated or disproportionate to factors such as silver's uses in jewelry, technology, and industrial applications, or cost and production levels in major silver-producing countries such as China, Mexico, and Peru. In particular, supply chain disruptions resulting from the COVID-19 outbreak and investor speculation have significantly contributed to recent price and volume fluctuations. If the short squeeze on GameStop caused fireworks among a few hedge funds on Wall Street, we hate to think what a short squeeze on the global silver supply will look like as hedge funds wake up to the possibility that SLV